Hey, Bulls and Bears, it is Sunday, March 13th, 2022. We've got a lot of financial, economic news here that we rounded up for you and wanted to talk about some topics today, including the housing market. Where is real estate headed in 2022? We're going to get into that and more. Now, I almost didn't do a video today. This move the clock ahead an hour, daylight savings time, is making the day seem much shorter. It is much shorter, but it threw me really. I didn't think an hour was going to make that much of a difference, but it threw me really pretty far off schedule today. Now, from my understanding, there's only two states that do not change their time, and that's California and Hawaii. Now, California and several other states are looking to not do the time changes or remain on standard time. And over the past few years, there's been hundreds of different bills to make the time permanent or steady and not have the spring forward fall back. And it's interesting when you ask people and we look at these polls, most people do not want the time to change. It's very nice in the fall when you get the fall back and you get an hour of sleep, as some people like to say. But then when you spring forward, you lose an hour. So it could really kind of throw a monkey wrench in some people's schedule and sleep patterns. Now, one of the things that I read in history that I recall from when I studied this, or when this came up in one of our classes, is that savings of candles to make daylight hours more align with people's awake hours to preserve candles is one of the reasons why it was implemented here in the U.S. Now, across the globe, there's been several different rationales for why time changes have come into play. Now let's get to the topic. Let's start off here with the housing market. Where are home prices headed in 2022? Higher. I know it's not a popular thing to say. I know the videos that people put out that say the housing market's going to crash, they get tons of views and people want home prices to come down. So many people, especially the younger generation, are priced out of the housing market, or they feel like they're priced out of the housing market. The thing is, if you take out a big enough loan, you're not priced out of the housing market, but then you're going to have at least 30 years in some cases, a very big home payment. Now, in some markets, you can still buy a home for cheaper than what it costs to rent, but that's becoming a very, very small group of locations where you can own for cheaper than renting. Even places like Michigan are seeing just skyrocketing home prices. We talked about that a few reports ago. Even rents in Michigan are what they were in California just about 10 years ago, and home prices are approaching in Michigan what they were in California 10 years ago. And I say that because I'm from Michigan originally and I'm here in California now. Right, so what things have to happen to keep home prices going up? Well, you have several different plays here, several different factors. One of them is higher loan limits that are backed by the government, in this case Fannie Mae and Freddie Mac. Now, for those of you that follow this vlog, you may remember just a few months ago we reported on this. Fannie Mae, Freddie Mac to back loans nearly $1 million as home prices soar. So instead of saying, hey, maybe we need to stop backing these big mortgages because home prices are going out of control and pricing more people out of the housing market, instead of saying that, they said, okay, now we're just going to back bigger loans. And of course, the rationale they use is because more people are priced out of the market, they need bigger loans to be able to afford the homes. But it's actually adding fuel to the fire. So now bigger loans mean people are bidding higher prices for homes, and that adds to the problem. So now home prices are going to be even higher. So folks, propping up of home prices is what's being done here. And that's why I try to urge everyone to look at details like this when you think that home prices are going to fall, or even the other YouTube economists out there saying home prices are going to fall or start dropping, need to look at just simple facts like this, that these markets are being propped up, the bubbles are being inflated and being blown bigger by the policy makers of these types of issues right here, these types of backing of the housing market. So as a result of that, you have headlines like this, which came out just in the past month or so. The average size of a new mortgage just set a record as home prices continue to climb. Also, as a result, first-time homebuyers skip starter homes, go straight for bigger homes. So people are taking out the biggest mortgage possible and not just trying to get into the most affordable home or the minimal size home that they can afford. They're going straight towards bigger homes. So there's no fear right now, for most people anyways, most homebuyers, no fear of any sort of correction or pullback on the home price pace of increase. Right now, please listen very closely. Just because I say home prices are a bubble, or I talk about the housing bubble, doesn't mean that there's going to be a correction or a price decline. In fact, prices can go up higher here. They can even double from here. Anytime you have this level of intervention, manipulation, propping up of the housing market, there's no ceiling to home prices. I know people find that crazy. All right, but we have tons of institutions now buying homes. The fourth quarter 2021 set another record for institutional home buying, and it looks to be this quarter here, the first quarter of 2022, which we have not exited yet. You know, we have the end of March will be the first quarter. Will be done. We'll see what happens, but it looks to be another record, even bigger than we saw at the fourth quarter of 2021, which was the record up until this current month. We'll have to see. We'll be reporting on that in April to let you know if it broke another record. What I'm seeing so far is, yes, another record-breaking quarter here, first quarter 2022, of institutions buying homes, and that's going to be another inflationary force on home prices. Also, we still have a zero reserve requirement for U.S. banks. We still have the buyer and lender of last resort out there buying mortgage-backed securities, even though they're telling us they're going to stop. They said they were going to stop by March. Here we are, mid-March now, and they still have not stopped. So if they stop by the end of the month, maybe they'll still hold to their word when they talked about March timeframe. But now with everything happening over in Europe and all of the conflicts and uncertainties out there, to me it's very unlikely that they're going to pull back the support for these markets, including the housing market. Now, there are a lot of home buyers out there right now buying out of FOMO. They're pulling the trigger because they see the writing on the wall. They see that this housing market is going to continue to be propped up. The bubble is going to continue to be blown bigger by all of these policies and by the way the banking system is being ran right now. All right, and I'm not here to predict if and when prices are going to come down. Again, they can continue to rise. They can double from here. Take a look at home prices up in Canada. The Canadian housing market makes the U.S. housing market look tame, and it's based on the same underlying factors: the fractional reserve banking, the support and propping up of the housing market via the money printers. And until some of these big structural underlying mechanisms are changed, you're not going to see a change in direction of home prices. Remember, when the housing bubble went bust in 2008, there was a big scare in the banking system. We saw the collapse of Lehman Brothers. We saw mortgage giants like Countrywide Mortgage basically failed, or in this case, got bought up by Bank of America. And we saw bailouts that up until then were unprecedented. Now, those bailouts are just a fraction of all the other support that we've seen being thrown at this housing market and thrown at the mortgage companies, and all of the deregulations, all of the bigger loans now being supported, the purchases of the mortgage-backed securities that we're seeing today dwarf what we saw with all the bailouts in 2007, 2008 financial crisis. So with the cost of living continuing to soar higher, take this information and put it into your decision. But when everything's going up, the cost of food is going up, you have to factor that into your monthly budget, and this big mortgage that people are taking on, you have to factor all these other expenses in: the cost of fuel, the cost of energy. There are people now that are struggling to pay their heating bill. Thankfully, we're headed into some warmer months now here with the spring right around the corner. And household budgets are being stretched further and further. Here, what's happening over in Europe now is tearing apart the global food system, and more export bans are happening, higher prices for importing food products here, and we know that the U.S. we import more than we export because we're such a consumer based economy here in the U.S., where endless amounts of money printing keep the U.S. amongst the world's biggest economies. But the pain is about ready to get more intense as prices are going to continue to rise for food and for most things that people consume here in the U.S., including a housing market, which is going to see higher home prices this year. Now, as more and more people get stretched in their budgets, more people will start selling their homes. The problem is you still have this massive institutional buying, and you'll continue to see home ownership drop as more investors and institutions, corporations come in and buy homes, but yet home prices will still continue to climb. So it's a pretty sad story. Let's take a look at the home ownership rate chart real quick here. And take a look to the far right here. We see that technically the housing market never recovered from the housing bubble going bust. Price-wise it did. Prices are now above, heads and tails above what we saw in 2007, 2008, which was the peak of the housing bubble. But home ownership never recovered. We never got back to the home ownership levels that we saw prior to the housing bust, which was actually approaching 70% back then. Now if we look here, we'll see that we're down in the mid 65% range. So home ownership never recovered. More institutions, corporations now, hedge funds own homes. Big investors like Blackstone and mega corporations now are your landlords. All right, so to stop this bubble from getting bigger, massive changes need to be done within the entire structure of our financial system. And I don't see many of those things being changed. Many of those inflationary forces are going to continue. And I wouldn't be surprised to see new inflationary forces to push home prices up even further. What's that going to mean? That's going to be incentives for home buyers, more programs to stop people from getting foreclosed, more forgiveness programs, more stimulus checks, and more debt at the end of the day. More debt, more propping up of this this massive bubble that we're in right now. Will there be a pin that pricks the bubble? I don't see one. Please let me know down in the comments if you see one, because that would be very contradictory to what I see here. But don't just give me, what you think is going to be the pin. Let me know how that's going to happen. Is it going to be a law change? Is there going to be massive upheaval, societal upheaval? Maybe food riots. Maybe food riots here in the U.S. But even that, even the threat of nuclear war hasn't really pulled these markets back too badly. So I don't see much relief on sight for people living on a limited budget right now that want lower cost of living and lower home prices. It looks all up, inflationary pressures from here. Wish I had better news for you, but that's what's happening. Invest accordingly and try to take advantage of this inflationary situation. And wish you all well. Hope you like this update here. Talk to you soon, everybody. Bye for now. Peace.